Good morning, everybody. How we doing? First. Nice. What's up, guys? Happy weekend Sunday day. So, just some foreshadowing. Um, I just made biscuits and gravy, and then I had an extra one, and I already feel a little comatose. Why add? I have no idea, man. YouTube just plays them whether I turn them off or on. It doesn't matter. What are your thoughts on Martin's analysis on GME only going to 200? I mean, it's just like a fundamental analysis based on improving margins. I don't think he's really factoring in like potential growth opportunity beyond like 5% year over year. So I don't think like that doesn't factor in like e-commerce, the NFT marketplace, anything like that. Oh, also like a bunch of people messaged me over the weekend about the Twitter space that I joined with Turd. First off, I didn't even know Martin was in there. And the only thing I said the entire time was to correct him about um materially relevant accounting because he seemed to be trying to push a narrative that like the GME board is trying to get people to DRS, which I disagree with heavily. So just FYI, I'm not like teaming up or creating a stock duo. Nothing like that. I think Turd kind of wanted me to just get in there and talk some shit, but I'm not sure. Happy long weekend, Pickle Man. Hope you talk about Cat at some point today. What do you want to talk about? I ascended to Dillionaire this morning. Do I get my song? Fuck yeah.
Happy birthday, girl.
Can SPY FTDs be a thing for positive price action, or is it too liquid to matter? June or 12 million. SPY always has a shitload of FTDs. Does it matter? Yeah. But is the settlement the same? Probably not, because it's so liquid. They probably, like, SPY FTDs probably settle out continuously, right? And then imagine how many CNS net off with an average of like 50 million volume a day. Yeah, I don't know about that Mo money, but I appreciate it. Was the idiot savant cat there as well? I think so. Yeah. I think I think JFresh joined at some point. Never joined a Twitter space before, so most of my first like 15 minutes in there were just me figuring out that you can't speak from desktop, only mobile. Check me out here. Finally reaping the benefits of my membership after 12 months. What's up, Vester? I'm kind of feeling SPY market going down this week. I think Cat will follow, or it's basically bottomed out. That's a good question. I think if we start to see a big sell-off, PMI was pretty rough. We could see Cat move down further. I don't know how much further Cat's gonna move down. It's already nearing the lower end of its range. Let me take this off Renko. But if we look, like there's really not much room before it breaks this trend. It's broken the trend in the past. This wouldn't be like the first time that this has happened. Hold on, sorry, I moved that. There we go. But like it broke down from its trend back here in September. It broke down again between like early mid Jan through like middle of February. Then like right around Feb opex, this just skyrocketed. I think on news of the war, that kind of faded off, and this last drop is a little more steep. I would be concerned that it could break down. I think if it does, though, it's probably just going to break down into a slightly lower channel. Long interest remains really strong on it. It's a good dividend stock. It's solid growth throughout economic uncertainty. So I don't think we're going to see it like, crash back to 2020 levels or anything like that. Remember that a lot of CAT's income is based on contracts. And just because we're in a recession, those contracts aren't going to disappear, right? Also, the dividends coming up soon, which generally triggers a bit of interest about a week before. And I believe the dividend date is on ex-dividends on the 19th. So as long as you have a lot of theta, you should be fine. I actually bought some contracts Friday near close, and then I'll look to average those down. It was a good choice. I ended up selling at like 83, 82, and then I bought back in at like 75-ish. So I saved a little money on the downside there. But I do realize it could drag a bit. It could dip lower. I'd say if it falls into this even lower range, which it hasn't before, but if it does, we're looking at like the high 160s. Jerome Powell, thank you so much for becoming a Cornishon. Boo, Wind Moon. I don't trust anything in the heavy manufacturing sector. I'm completely out of cap for a while. That's fair. July 13th is CPI. Yep. No worries, Jerome Powell. Did you see Deutsche Bank states baseline view of S&P 500 rebound to 4,700 by the end of 2022? I wonder who's going to jail for that prediction. Oh, it's not Credit Suisse. I'm just kidding. 4,700 by end of 2022? Nah, I don't think so. Sounds like a good way to sell boomers mutual funds, though. Rip my 715. I held way the fuck too long. 715 what? Guevara. We haul cats from the port to the dealership. It isn't slowing down. Yeah, they're not going to, I don't think. There's some issues on in manufacturing that are going to hit hard soon, but I don't think that we're really going to see the effects of that on the quarterly reports till Q3. Now, don't get me wrong. Some of those shares are going to get priced in way before any financials are disclosed, but I still think Cat's doing well, and I think their earnings are going to be decent yet again. And not only decent, maybe even better than last quarter. Almost all the big banks have predictions on the SPY closing 2022 higher than the previous all-time high. Maybe they think hyperinflation is coming? Possible. I don't know. That's a really slippery slope that we don't seem to be on yet. And we can already kind of see the movement of the bullwhip through the supply chain, right? And that's going to be deflationary going into the end of the year. That and the decline in the housing market, those are both going to be deflationary effects. So, I mean, you think inflation is going to increase beyond the deflationary forces? I mean, the Fed rate, if it's doing nothing else, is going to help us, push back against inflationary growth after the supply shock is resolved. What's up, Bob Vance of Vance Refrigeration? Gaff, sounds like same guys screaming on Twitter about BTC to 300K by year's end. Yeah, I bet, right? How to Finra define illiquidity? So, as far as I can tell from the settlement guidebooks that I've read, well, the ones that are available publicly that I've read, it's not illiquidity, it's unable to you have to be unable to purchase, right? The stock can be illiquid and you can still buy it. And so, the way it looks is that at the end of their deferral period, they must attempt a market buy. If the market buy fails or is unable to fill, they have to report that to Finra, and then they get an additional extension. That 5-time extension thing, though, they can't stack it. Every 14 days, they have to attempt a buy-in. There is no case that I can think of where GameStop cannot be bought. So, if you place a market order on GameStop at any brokerage, you are going to get a fill. It's not that illiquid. And most of the cases formerly that I found where that extension has been granted, it's been because the stock has been delisted. It's trading on, an exchange that has no volume, things like that. But, it's or there's no available shares, like there's no public float at all. Like the company's delisting itself or going private, things like that, can prevent that buy-in. But I don't think there's any case for that to be made with GameStop trading, over 1 million volume a day. At least no historic evidence I can find of just a stock being illiquid being granted that. It seems to be more for extreme circumstances, and they still have to attempt to buy it every 14 days. And not via a limit order. 100% agree. Cat is actually one of the stocks that can weather the storm better, but I'm liquid for a while. Fair. Cash is a position. I mean, the market can remain irrational for quite some time. I'm not saying that the market can't hit 4,700. It just seems very unlikely. For 1 minute, can I hear you talk about 100% utilization rate for 100 days that everyone is talking about? Just looking for your thoughts. I mean, utilization rate on GameStop began on January 7th is when it first spiked, when XRT began the thresholding process. It carried forward, I'd imagine, up until after the May run up, where I haven't looked at the Ortex data, but I'm sure it dropped off around that point when XRT was put back on the threshold list, cleared and put back on the threshold list. Utilization should spike back up again after the 8th. I don't really know what you mean by 100 days of utilization. I don't see the relevance in that. Many of those shares are borrowed and returned within the same like hour, not even just the same day. So you're talking about utilization and holding those short positions open for 100 days? Allow me to chime in with this. I work at a shop that subcontracts for cat stuff, heavy mining trucks. This quarter we've been slammed with work and we can't get out as demand is too high for us. Yeah, that and you're right. A lot of Caterpillar equipment is used in the mining industry, specifically mining and logging. And both of those industries are likely to see an uptick moving into the like third and fourth quarter of this year, maybe first quarter of next year, as interest in commodities picks up. So yeah, I could see Cat accruing more and more contracts over the next year. Oil speculation, um, logging, mining, rare earth materials to, you know, I believe a pretty significant chunk of the infrastructure bill is dedicated to improving, you know, the US's capability for mining rare earth materials. Could you show again how you drew the channel on GME? I tried to do it myself, but I have it slightly different. Oh, shit. Hooray, my first member stream that I can actually type in. Now I finally had something to say. Humongous, thank you so much for becoming a Cornishon, man. I'm just thinking end of year, it's going to get rough. You might not be wrong, Popcorn Trader. It's a possibility. I've canceled my Costco membership to instead sign up with the Obligations Warehouse. They have all the best stuff. Fewer customers, too. What made you purchase a VWAP hat? You have an ice cream sandwich and a VWAP fetish? I just like VWAP. Do you expect borrow rate to start going up shortly before or after a run has begun? I expect borrow rate to start climbing into the week of like the 11th and 12th. Is it the 11th and 12th? Yeah. Like 11 through 15. Probably out into the settlement week for opex. What's surprising is the borrow rate isn't dropping at all right now. I mean, it is, but it's like fractionally, right? Like hundredths of a percentage point a day. If he's low T, he's got to go. Hashtag ban Carl. Hashtag low testosterone. I don't know. Carl has a whole batch of our new perfume. Recession. If you haven't tried it, it fixes low T. So, unless he's not using it, I guess I could ask his wife. Still expecting a possible GME after hours run. We don't really know what to expect that day, but we expect something to happen. It doesn't necessarily equate to a run. I work in aerospace defense, and the contracts are plentiful. I'm not bullish on HYMC at all. Have they ever actually mined any gold in the history of the company? mining speculation companies are generally bullshit. Unless they have active mines, I'm not even interested in investing. Hey, Pickle Man, I'm back from training. I was watching for an exit last Friday when I got told to go fuel the trucks. 45 minutes later, I had no portfolio left. Hope my few September cat calls print. Ah, Jesus Christ. That's rough. Man, I'm sorry to hear that, Pog. I hope so too. Ugandan gold. Next country to get the Team America treatment. I have no idea what you're talking about. Expectations for GME and the overall market going into July opex. Well, going into July opex, there's CPI data. There's SLD the week of opex. Fed minutes come out this week. I don't expect any of the economic data coming towards the end of this month to be particularly good. You know, we're bordering on a recession already. I'm sure the market isn't going to perform extremely well. CPI is likely to still be up. Although if it's up less, that could be considered bullish. You know, with the supply shock starting to move through the supply chain, and manufacturing getting the worst of it now, the Fed may move towards pulling back rates into the end of the year. They may make some more dovish statements. That could create a bear rally, right? Will this be the last public stream so we can go back to baseless conspiracy theories? Maybe. Hey, Trina. You think we sub 115 before the 15th? I think we're sub 115 before the 15th? It's possible, yeah. For GameStop? I think so. I think they're going to keep grinding us down into this resistance. I mean, right now it's holding, but it's bound to be getting weaker. If they push right now, you know, and they don't want to because of the active fund pressure from the overall market. But if they did push, you know, I think they could easily get us back into like the 114 range. 113. I think especially if there's a drop in the market and they get a good opportunity to short. Could you discuss the upside and risks with IV plays, please? Please don't think the pores understand the risks. I don't think the pores understand the risk, but seem to be YOLOing into 950s. I mean, so that position specifically is, you know, exposed to volatility. So you have volatility exposure, and you have, you know, you're kind of protected from delta. So you have very low exposure to delta. So if you buy these, you know, at a point where IV is low, you can get the contracts very cheap, and then when IV moves up into higher ranges, you know, you can sell them. I guess the biggest risk here is IV continues to drop, right? You know, and you feel the effects of that. You know, like there isn't a run to make these print because of the increase in IV. The other risk is they're very hard to sell at the peak. Their peak price is generally very brief. And so the way you need to manage these positions is a little more difficult. You know, you need to like be prepared to sell while the price is rising. Because the value on a rejection will drop off dramatically. So they are in fact pretty risky, and they also don't do anything to support price improvement at all, right? So if all of retail goes and YOLOs out on 950s, there's nothing to support a move to the upside, right? There's none of that strength in the positive delta. I guess the other kind of shitty part about it would be that so yeah, they're difficult to manage. Their peak values are very short-lived. They should only be a small portion of whatever options play you're thinking of. They just grant you a lot of leverage and exposure to volatility. But I feel like if you don't know what that means, or you don't understand the purpose of the position, you should probably stay away from them. Two funds my father was in gave out end of year bonuses last year, which they hadn't done since 2007. Interesting. On a scale from 7 to 41, how much bear trap? I don't know how much bear trap. In what? More specifically, grief. Like on the SPY? Poor's chat on like the S&P? Poor's chat on Discord want to know about your 950s and what you're doing with them. They got riled up on risky plays again. Jesus Christ. No matter what you do, degens are going to degen, right? Like, whether I talk about it or I don't, if you're going to play a completely fucking degenerate play, then, 950s and 390s are probably better than buying 500 weeklies. They're still risky, and they only represent like 5 to 10% of what I'm buying into for opex. I haven't bought any yet, so there's that. If I wanted to enter an at the money call on CAT, would August 19 be enough time for it to move up? August is a little risky. Just figure out a risk level, and if it moves down, be prepared to bail, right? And take your money off the table. Some of the best advice you can get in a bear market is don't hold on to your losers, right? Especially if you're long exposed. You want to be in and out quickly. You don't want a lot of like long-term exposure. You don't want to carry options that are way under. You just want, if they hit your risk, sell. If you find another level of support, you can consider re-entry. Because both the up and downside can be very volatile, right? So if that's something you're considering, maybe consider setting a stop, unless you're prepared to average down and roll out for long periods of time. Will the C35 plus 2 covering from the big FTDs affect a run in any significant manner if opex deferral hits mid-July? Okay, hold on. C35 plus 2 covering from big FTDs affect a run in any significant manner. So you're talking about the FTDs coming this week from end of May, I presume? No, I don't think they affect a run anyway. They have to be cleared. They could create volatility. So they might spike IV before the run, which would be, unfortunate for people looking to enter options positions or get exposure to a potential opex. Can you get into more details about this event on the 8th, be it an after hours run or something else? I think it was on pain meds at that time. So on January 6th, before market close, negative 4 million delta on GameStop was exercised. We assume to bring XRT in line with the SEC audit requirements. We don't know what the current exposure for GME on XRT is. Like we can estimate exposure by looking at the puts and what's being rolled forward, what's being closed out, but we can't know the exact amount of exposure, right? So we know there's some exposure. We know that, or well, we think we only have one point of evidence. We think that that will need to be resolved before XRT begins the thresholding process. So yeah, that can create an overnight run on the 8th after hours, most likely. If they manage it in the same way, there's potential that they could manage it in other ways. They could be exercising small amounts of negative delta over the last 20 days to satisfy it in advance. We don't know yet, right? Like I said, we have one point of evidence. So if we see something crazy, that really helps, right? But if we don't, then we need to look for something more delicate, right? Then we need to explore, like, has there been negative delta being exercised on GameStop over this period of time? Have they been satisfying these obligations in other ways? And we're trying to look into that now, but there's a lot of noise in the options chain to identify a single position like that, unless something drastic like negative 4 million delta is exercised, right? You expect any downside in the market this week for GME IV to pick up too? Yeah, I mean CPI is this week. Or no, CPI is the week after, right? It's on the 13th, so it's the following. Fed meeting's this Wednesday. Sorry, Fed meeting is this Wednesday. CPI is the following week on the 13th. If we do run, well, if we get an opex event, we know how to identify them, right? Strong volume, high pre-market volume, large price increases heading up towards gamma max, right? These are all identifying signals for an opex run. July was tricky, or June was tricky, right? Because we did get a strong run Friday into Monday. We moved up pretty fucking hard. Then it just died out, right? So without that volumetric price action, it's not really an opex, right? Utilization rate was 100% for 101 days until the Jan 2021 run up. Ortex is reporting again that they have been at 100% utilization for 100 days in a row. Is this not significant? Can you look at Ortex data? I don't have Ortex. I don't think their data is ever significant because it's incomplete. It's an aggregation of the data sources that they have available, and it shows 100% utilization from the sources that they are tracking. That does not necessarily mean that 100% utilization has been achieved, right? It just means that what they have visibility on is at 100% utilization, which, if you look into Ortex, is the same exact shit that we have visualization over without Ortex, right? They don't pull any data that isn't already publicly available. They're just looking at the same data and putting it in one place for you. So no, I don't think Ortex's utilization is significant. But yeah, utilization is still high. I think it can potentially go higher, but we know that there's share availability in the ETFs. There's likely share availability from lenders that Ortex doesn't have any visibility over. The primes haven't probably stopped lending GameStop, right? I think it's hilarious that Super Sync thinks we're at 100% borrowable share utilization, yet retail has zero access to the SEC lending pool data. Yeah, I'm aware. What are your thoughts on millions in 10C and 20C coming for BBBY? Is this a hedge or just something? Thank you, by the way, Stefan. Sorry. 1020C coming in for BBY. Is this a hedge or just something? No, someone knows something we don't. It could be somebody buying into a position. They look like spreads. Don't forget that the options chain is mispriced. So this kind of activity isn't necessarily unusual as people come in and take advantage of that arbitrage. But taking advantage of that arbitrage can reprice the chain, right? And balance the call versus put value, which could put more pressure on the market maker to hedge upside. That's really what we want to see on BBBY, given the current state of its options chain, is we want to see the market maker come in and start hedging the call side. And if they do, things could get crazy. We definitely saw some buying, a lot of buying this week on BBBY. So it's getting spicy. I mean, as we approach the 15th on BBBY, it's going to get pretty interesting, especially, I think, with the shareholders meeting and those puts expiring the following day. Are you expecting Cat to bounce anytime soon? I mean, yeah, I do. I do think Cat can, I think Cat can bounce from here. But if the Dow continues down, I think Cat will follow. So, you know, we're kind of waiting for it to find some support. It did on Friday, going into the end of the day Friday. It did already bounce a little bit off this lower trend. So right now, you know, it kind of looks good going into Monday for more positive price improvement. But again, if the market turns down, this will as well. Right? So like I said earlier, you know, make sure whatever your risk is at, that you stick to it. You know, set your risk and stick to your risk. Don't be greedy with your calls just because you're holding them. They can always be bought again. They don't disappear because you sold them. If Bobby runs hard, you think people will sell and double into GME? I think it's largely the same group of people. Yeah, they might. They might not. You know, when you have something valuable, you don't always want to sell it. And since shares have been so cheap and people have been buying a lot of shares, a hard run could mean a lot of covered call selling too, right? Which would lead to, you know, some money maybe going back into GME. Some people will sell. Obviously, you know, they're going to capture profits from options. But, you know, after they've made a lot of money on BBBY, they may be more encouraged to put it back into BBBY, right? My dad buys and sells gold for his business, and gold might hit 2100 in the next few years if the market bottoms out. That's what happened to him during the Great Recession. You know, I want to agree with that, but man, is gold just not seeing any performance improvement right now. I don't think there's enough confidence in a crash. And so we don't really see, normally in an event like this, you see money pulled off the table and then money put into commodities, precious metals, bonds, uh, value investments, long standing blue chip companies that pay dividends, solid, stable companies that aren't going anywhere regardless of, a recession. But there just doesn't seem to be enough confidence market wide. And maybe it's just because there's so much liquidity still from, all the Fed programs. So, and the quantitative easing. So it's, it's possible that like bigger players are just playing the downside. They put their money in, they pull it out, they put it in, they pull it out, riding it up and down as it moves into what looks more and more like a soft landing, right? Without a catalyst, we have no crash. And I think the biggest problem right now is people aren't seeing that catalyst. And so I think that's why I've been buying into commodities so heavily, because eventually we're going to see a catalyst. I mean, it's inevitable given enough period of time that a catalyst will occur. I think Japan, but it could be something else, right? It could be the failing housing market finally, reaching a point of no return. Depending on how fast price realization's occurring in that market. But I mean, gold's cheap relatively right now. Silver's very cheap right now. Steel, coal, all the big commodities are very inexpensive. I think Warren Buffett just doubled down on Occidental this weekend, or announced that he doubled down on Occidental this week. So, still interest in petroleum, or oil. What membership level is baseless conspiracy theories? Gets that wallet. Silly. Thank you, Guevara. Cat puts till market turn. You could, or you could just wait. I don't like Caterpillar puts because it can stabilize for long periods of time, even against a downward trending market. And we've seen that already happen a couple times this year. That's why I don't play the downside on it. The upside tends to be pretty quick. Usually at some point, the dividend catalyzes some upside. They have a pretty big yield, so shorts generally don't want to carry into their ex-dividend date. So, that's one of the reasons CAT cycles so hard, right? Is that, shorts are more than willing to pile in because the range of movement to the downside is very significant, right? And if you're fading the peak on these runs, you're up like $40 a share if you can hold the position for long enough. But you also don't want to hold that short into that high yield dividend, right? And so that's when they get out, and that triggers, more interest in it, which drives the price up. So, it bounces a lot, right? That and their good earnings, which continue to remain quite impressive, especially given the rest of the economy. But yeah, I really don't like playing the downside of it. It's risky. You need to be able to hold for a long time. Like a really long time, and you wouldn't want to do it here at the bottom. You'd want to do it at the top. It's not that I haven't bought puts on CAT, it's just they've underperformed calls, like, significantly. Excess jewelry is the first thing sold off when people need money. Oh, yeah. Absolutely agree. Which means if you have Rolexes that you intend to sell, now's the time for people speculating in Rolexes, because people won't pay as much for them later when the market gets saturated. Curious to know if you're comfortable sharing fruits of your research over the weekend. Doesn't data indicate we've now surpassed the exposure present leading into March? XRT puts right now, they went up like 10% on the 29th, at 168,000 so far. So, if more obligations are not created, the amount of XRT exposure moving into July opex is significantly lower than the amount of exposure moving into March. The carryover from June is higher, but the current amount of puts on XRT moving into July are lower. Don't get me wrong, we can see those increase very, very quickly. Sometimes like 8 to 10% a day for multiple days in a row. It's still early, right? And then we would expect to see most of that increase occur between the 8th and the 15th. I'm just commenting to remind the poors that they cannot comment, but I can. Can you touch a little on choosing between different top of chain IV plays, or is Jan the only play? Jan and October 390s are both really similar contracts as far as Greek value. I would say the October 390s maybe have a little more delta exposure, depending on how hard we run, if we run. But you can hold the Jans for longer. They'll have less theta decay. So, you know, it's a decision between the two, really. Like the greedy play would be to take the extra delta exposure. The more conservative play would be to take the theta, but both of them are just super high risk, right? BBBY 269 by end of month. I don't know about that. I'm hanging in there for the shareholders meeting. I'll see what happens. Thoughts on DDS? Really got slammed this week. Yeah, it did. Sorry, hold on. I've got to adjust this. I have all my charts set up kind of weird. So DDS falling, out of the channel that it's sort of traded in for quite some time, right? Falling below the low trend here, which sort of didn't really exist, but it was more of an estimate. This is also due to the increasing volatility, right? Something I spoke with Stefan about like a few times over the last week is that volatility on DDS is increasing because liquidity is drying up, right? There weren't very many shares of DDS available to begin with, and as it becomes more and more illiquid, volatility both to the up and downside is going to increase, right? Until something stabilizes it. And so yeah, it's seeing a bigger downside than normal, but it could also see more significant upside, right? If we look at this on the weekly, you'll see that the volume for this drop off is very minimal. Less than 4 million volume over the last 4 weeks, from a high of 341 to its current low of 200-ish. And whereas, the run up in was almost 2 million volume, which brought the price from, 223 to 341. So this price action's occurring on dwindling volume. I think their earnings remain decent. Yeah. Last earnings they beat by 6.55. I don't think their earnings are gonna fall off significantly either. They're actually a surprisingly well-run company with very good profits, good free cash flow, strong insider interest, solid assets. It's not a bad company. It's a bad company to short. But how do you cover, 6 million shorts on DDS without creating a short squeeze? You really can't. When's the next opex begin? The next expiration date's the 15th. So we're looking to the following week, but we're still hesitant because there's some things that I don't think we've agreed have lined up in significant numbers enough. It's starting to look good though, and there's still 2 more weeks. Thank you, Dillionaire. Message retracted. Are you going to enter any position in prep for July 8th? I don't know. Maybe like a IV play to hold overnight or over the weekend. Because of the way January 6th played out, where we spiked hard in after hours and then opened almost at the same price that we closed at, right? And then we're, subsequently our prices crushed from there. As it appeared, liquidity on XRT was quite high after the events of January 6th. The only real benefit that came out of this was a large spike in IV. So this could be a good opportunity to sell covered calls into the 15th. Or it could be a good opportunity to, cash out some IV plays first thing in the morning. I wonder if we could see on the Jan calls, the 950s, what happened to those. Maybe that's something I'd buy for overnight. That's not GME, that's Amazon. Here we go. This is correct. XRT on reg show equals XRT can't be used for synthetic creation, harder to find short ammo, but also the easier to manage existing built-up synth-induced short position. No, it can still be used. Yeah, so reg show actually does nothing to the creation redemption process. At all. Because, they can't short XRT is the problem. Right, without and they can technically, they have to get a pre-borrow agreement, but XRT has infinite liquidity, so they can always get a pre-borrow agreement. So yeah, it does nothing. It doesn't do fuck all. I think the only thing that XRT being on reg show does is change the audit that they're required to submit to. That's it. And obviously thresholds out FTDs that are 13 days old every day, until it reaches a point at which the FTDs are no longer high enough to continue its inclusion. What was I doing? Oh yeah, Jan 23, 950. Let's look at this. So if we look on Jan, that's August. See, even these weren't that great on the 6th. At the time, these were... If you'd bought the day before or on the 6th, you could have gotten them at around $6. and you could have sold them at a high the following day of about double, so 2x. So even these didn't, you know, do that well. And the day this fell on, honestly, like 1 and 0 DTs would have been better. This time it falls on a Friday though, so your only option is to buy like weeklies the following week, which kind of sucks, considering you kind of just want exposure overnight. Yeah, so I'm not too sure how much I'm gonna be interested in playing that move. Oh wait, hold on, sorry. Do I not have that open? Oh, there we go. Yeah, so this is like the Jan 6th movement right here. So this is the 6th, this is the 7th for the 950 calls. This just wasn't that great. But I guess, I mean, if you're just holding them overnight and you're going to sell them the following morning, it's not the worst thing in the world. Or the following Monday, in this case. Thanks, Greg. It's hard to get rid of the losers when I can condition myself to diamond hands. I'll set a tight stop if I decide to get in. Yeah, make sure that if you're looking to play cat, you're looking for stabilization, maybe even a little bit of a bounce to confirm that you're moving away from that risk level, and then have a tight stop, because if the market moves against you, it can move down quick. Jimmy runs in July. OPEX, do you think BBBY will run as well? Well, given that BBBY didn't really run for June or May, I hope so. But we don't know yet, right? There's been massive fundamental changes in institutional ownership over there, most of which have not been reported fully yet, right? Until we get that next round of 13Fs, we really don't know. You mentioned CCs that someone had to hedge them immediately. Could that be the big push for DRS? DRS keeps you from selling CCs. Thoughts? I mean, it does keep you from selling CCs. Yeah, I mean, it does appear that the OCC would want to collect collateral on those if they're in the money. Which may be some of the effect that we saw going into May OPEX, is that a lot of people were selling in the money covered calls, right? And then the price ran, pushing those covered calls in the money, which would then prompt the OCC to collect collateral on them, because they're hard to borrow. And so, yeah, that could have been one of the factors that drove our borrow rate up so high so fast. Did you see XRTs on Reg Show? Yeah, I'm well aware. Not the Philly exchange slowly exercising the negative delta away. No, they're doing reversals. They're doing reversals to clear out FTDs, and it's been successful so far, as you can tell. GameStop not on Reg Show yet. Don't get me wrong, they could fuck up. GameStop could go on Reg Show, but right now, that's what they're doing to keep it off of it. And it is so far successful. No, they don't need to do married put calls. No, they don't need to do anything illegal. They can simply use reversal trades to generate volume. The problem with doing that is it ties up capital and increases their risk on their GameStop position. Thanks for answering my question. My August put for GME is slightly under, despite being in the money due to the IV. Yeah, the IV crush over the last few days has been pretty rough. It's actually why I closed my GME puts over the weekend, because I didn't want to carry them into this continued IV crush as they fail to break us below the lower resistance. I'll probably re-enter them, some of them Monday, but we'll see. Obviously, like pre-market and things like that are gonna have a big effect on that decision. If the market's gonna continue to stay in this like stagnant sort of bear rally, then I'll probably hold off. until I can get some confirmation of some downside. Because, you know, we're already pretty aware that they don't want to short into active fund buy pressure. It doesn't seem to be advantageous for them right now. Liquidity's market wide, and in GameStop and GameStop containing ETFs is quite low right now. The end of the day run Friday is a higher high, more likely. I mean, if active funds keep buying in the market, then we can push up through 126.70. It is a hard resistance and a strong support, but that, yeah, I think it'll depend largely on the overall market pressure. If you sell your IV plays towards the beginning of the run, wouldn't that still give you enough time to buy more calls with that capital? Yeah, potentially, but the price movement to the upside is already going to be priced in, right? Double down. So you're just spending more premium to buy relatively the same number of contracts. You're chasing, so the gains are, you know, minimal. They would be the same on the contracts that you bought before the run, or better. How long does SLD last? It's kind of always going on in a way. But the deposit period from the third Wednesday to the following Friday is only 3 days long. Then the settlement begins, which carries out into the beginning of the next month. So they diffused the settlement period after March. Previously, you know, they had to settle quickly, which caused the market to rally almost immediately after the deposit period. Now it's a little more diffuse. So, you know, sometimes there's a little rally, but it's extended for a longer period of time. Diluted. Entire float of Bobby traded last week during the big downs. What mean? Longs moving in, people jumping ship or something? I mean, shitloads of call volume. So a lot of hedging, right? A lot of puts bought, a lot of shares bought. The entire float trading isn't really relevant, right? Most of that's just churn from delta volume. I don't know why people focus on like volume in excess of the float. It's not really a significant indicator of anything. It just means a lot of volume is being traded, right? You see, Uganda discovered 12 trillion in gold. No, but that'll drop the price of gold. Upgraded membership to Long Johnson. Frosty Balls, thank you so much, man. You look fresh today? I feel like shit. I just ate biscuits and gravy. It was so salty and delicious. But it was also like 4,000 calories. I need to go like run or something. My brain is frazzled from all the pain meds. Did you did you ever do the pretty chart for the T+82 where you do the vertical lines on the chart showing the time lag like you do for FTD opex? No, not yet. I mean, I've done it, but I haven't done it for anybody else yet. Hypothetically, if BBBY buyout offer at 15, it would be bad to hold leaps at $20 plus strikes. So prudent to roll expensive leap leads to the lower strike with lesser contracts. I don't understand why BBBY would accept a buyout offer at $15. Why do you think that shareholders would agree to that buyout? I mean, yes, sure. rolling down your leaps is probably not the worst idea, but why that price, right? I think for the housing market to fail, you would need to see unemployment first. No. Yes and no. There's bigger like packaged like group loans that are being sold to like real estate or being used by real estate speculators, that maybe have more variable interest rates, and those are getting hit really hard by the increasing Fed rate. I think those are where the defaults are, right? Not so much your regular families that are remaining employed. Also, the fact that it's just harder to get a loan. People are less likely to try to get loans because of the increased Fed rate, right? Like, you were getting like 1% and 2% mortgages last year. Now it's like 5 to 8%. People are far less likely to buy a home under those conditions, right? So the demand is drying up as well. It's multiple factors affecting the real estate market. Wait, what about Japan? Do you think they're going to dump treasuries? I mean, they kind of need to, right? I talked about this a little bit because I want to take a position like long yen and short the Nikkei, because the BOJ is still keeping the curve of Japanese bonds artificially low, and consumer inflation remains at 2%, but their PPI on the manufacturing side and production side is at like 33%, right? And so that margin's fucking unsustainable. Especially with the yen continuing to fall like 10% a month over the last couple months. So I think eventually the BOJ is gonna, Bank of Japan, is gonna come in and set pricing, and a collapse of that margin is gonna trigger a squeeze on the yen, simultaneously a massive collapse in the Nikkei. I don't think that their current inflation versus PPI margin is sustainable at all. So yeah, I think they're gonna reprice kind of like who is it? Switzerland did with the euro. They were like, yeah, we can't do this anymore. I don't know when it's gonna be. I don't know if the Fed's gonna bail them out to prevent them from dumping treasuries. I mean, there's a lot of other factors that go into play there. But yeah, it's interesting. Automotive loans are in a bubble. Yeah, I agree. Not variable rate though, right? Generally. How far behind am I? Like 20 minutes? Jesus Christ. This is what happens when all the Cornishons get in. That's what I was alluding to. Now that there's like 500 more of them. That's what I was alluding to. The carryover X, the new obligations building into July. When combined support a compelling amount of obligations to settle. Yeah, I agree. I think that's why March was such a big run compared to, November or August. How many 14 days deferral can they get? As far as I can tell, the only case that can be made is for code 40, which is security and transfer. And that's two 14-day deferrals, which the volume supports. The volume on GameStop doesn't really support a 70-day carryover. And even if it did, they would still be carrying over in a cycle. If they were deferring that much, if there were that many deferrals in place and they were creating a system of repropagating deferrals where they're just constantly, using more and more of these Finra forward deferrals through Rex. That cycle of continuous obligation settlement would still be in line with the cycle of continuous obligation settlement that we see occurring on GameStop already, right? So 78 is still, or 70 days is, still like basically the, 28 plus 28 plus 14. Right. So if they are extending those out, I mean, and the volume doesn't support a 70-day deferral, but if they were, we'd still be constantly seeing previous obligations being settled out all the time. What's the thing you wish to see which hasn't lined up yet for opex? We're looking for a few things. We're looking for continued compounding of puts on XRT. We're looking for a bump in the borrow rate of GME following July 8th. And we are looking for something to happen on July 8th. Sorry, if I miss your question, the chat keeps gapping down because I'm so far behind. You're still showing the TW window. Oh, yeah, sorry. I fixed that though. Whatever. Tuesday, who gives a shit? The next day, the fucking market's open. This Philly exchange thing actually already happened in January 2021. It did. Yeah, it also happened last year as well. This isn't the first time they've done it. Can you look at the SPY for the last few 4th of July weeks? I'm thinking there was a dip. Actually, generally, July 4th is a better performing. Like, the day before July 4th is generally better performing. We went over that on Friday on the stream. We got here on the, what's, so if you look here, the week after, kind of straight up in 2020, 2021. Pretty much straight up all the way until SLD. 22, we bounced a little Friday. We'll see what happens the rest of this week. The SPY has pretty strong support right below it to maintain a move up into this higher resistance line. I don't know if it will though. I mean, it's gotta really move to get back up into like the 390s. But we could see another little bounce, maybe like 386 before coming down into the like second half of the month. Yeah, I mean, I've been trying to buy as much BTU as I can below $20. Whenever the opportunity presents itself, I've been buying more. I still think coal is going to do very well, especially as funding dries up for green energy over the next few years. Remember that coal still provides electricity to a very large chunk of the planet. Did you make a solid gravy roux for those biscuits? Yeah, sage and browned butter. A dark roux, actually. White pepper, salt. That's not very hard to make. Oh, I don't know. I just buy like whatever they've got. I don't have like a particular brand I'm fond of. DJBD. Idaho beef, pigeon whale. Welcome back. Thank you so much, man. I appreciate it. Let's see. I know I have it somewhere. There we go.
$99 straight to Kirk's pocket. He's gotta be a shill cause he's taking all my money. Think he's got a gun to my head.
Mayron wasn't a slouch either. Either low 80s to 150. Yeah, it wasn't. And it was on pretty low put closure too. So, you know, I think a lot of that had to do with the illiquidity at the time. I think that's why it ran so much harder than our expectations. Like we were expecting like a bump from May opex because the put closures weren't very high, but the liquidity was extremely low, and we ended up actually getting like kind of a fat run. We didn't break through gamma max, however, which is important to note. And there was no, as far as we know, there was no entropy swap in place until into June, right, when we saw them entering it. So, you know, I think May was just a chance to blow off some obligations for them, and try to improve liquidity going into June and July. But, you know, we had much lower expectations for the May run. We expected maybe a bump the week that it ran, and then the following week we expected very little, and yet still got kind of a decent like $13 run on that feedback loop. I think we topped out at what, like 148.50, which was just below gamma max. Fiscal stupidity, thank you so much for gifting 5 more memberships, man. Parabolic, Michael Trena, Johnny, Carl, and AC. Welcome to Cornichon, guys. Thank you, Fiscal Stupidity. Guys, make sure you give Fiscal Stupidity a shout out for hooking you up. Super cool. That was a girthy coup. I was feeling it. Commodities instead of a give a share replicate certificate for holiday gift. Smart. If no July opex run, what mean? The next month? Right? Obligations can only compound for so long. Right? So the longer they drag this out without covering, the more they have to cover all at once. We know this from, you know, December, January, February, right? And really, you know, December and January, we were expecting to realize FTDs, right? And I think this is a lot of like what is misunderstood about November opex. And I feel like I've gone over it before, but maybe one more time. You know, in November through January, we were expecting sort of a repeat of last year, but we didn't really have the FTDs to support that anomaly event, right? And this is kind of, you know, back then, this is where our train of thought was. And, you know, we assumed the FTDs would pick up as exposure continued to compound. And we really didn't start to see FTDs pick up until more recently, right? We've just started seeing them into the end of May start compounding. So early, but, you know, wrong. And now that we are seeing these FTDs beginning to compound, I think, you know, they were able to push out what we expected a little longer. And I think a lot of liquidity got dumped in November. Like, a lot of people sold. I think a lot of people got back in
between end of December through January, Feb, and into March. And then I think the March run prompted even more people to get back in. But I think there was a significant amount of selling and liquidity unlocked from November to January. But really, if we think about it on our opex cycle, right? Instead of thinking about it, expecting these anomalies to occur, which I do believe May was one. I do believe May was an FTD driven opex plus anomaly event. But if we look at our like F-man cycle from then, right, then we would expect the next run in Feb. But if Feb was deferred, then we get a run in March, right? And then in March, the next run would be, the next run after this would be May, which we saw. Which would then imply that the next run is August, except that June was moved forward, and we know that the obligations for June are pretty significant, right? They were higher than February. So maybe what we're seeing is like May, June are now going to be realized in July. And that's what it's looking more and more like. Very, very few obligations closed in May, lots of obligations closed in June, and now obligations due again in July. So not only are they compounding these cycles, they're compounding them faster and faster, going from quarter over quarter to month over month. And yeah, this makes it, harder on us, right? Because, we can't just wait till we have these massive number of obligations if they're going to blow off some steam like in May every once in a while. That's going to fuck up our timing. And so, what we need is exposure. We want low risk exposure. So essentially, before these events occur, you want call exposure, long side exposure. But you want to have a risk set on it, right? If we don't start to realize volume, if we're not seeing a run occur, you can bail with minimal losses or slight profits. Again, if I missed your question, just ask me again, because the chat's going faster than I can. Is it really fair to assume anything about future SPY actions from previous July 4th trends from 2020, 2021, which was the hugest bull market years in history after the COVID crash? Is it really fair to assume anything about future SPY actions from previous? Yeah, sure. I don't think so. I don't like using like historical seasonality on the SPY. It's not totally unreliable, but it's pretty fucking unreliable. I can't tell you how many people have lost millions of dollars trying to play like a fall correction. To give long side exposure, what was the call chain looking like Friday late? I've been busy. It wasn't super compelling. Calls weren't really doing a lot into the end of Friday. Can you explain again how the holiday deferral works? Only if the holiday is on the settlement date. Yeah, so the holiday has to fall during their settlement window, right? So, June 17th, we have the expiration, the opex. This is opex, right? And then T+2, we have the settlement. But on one of those T+2 days is a holiday. And then they can apply for 2 14-day deferrals. Which gives them and essentially establishes an account against net credit or net capital. And that obligation has to be settled in 28 calendar days plus a 2-day settlement. Yeah, biscuits and gravy kicking in. I'm starting to feel Can I exercise my CSP anytime it is in the money? Exercise your CSP. Close it? Your put? Can you be more specific on that, Foundation? Does the platypus prove intelligent design? If anything, no. It would disprove it, right? Could you explain how the holiday deferral works? I did that. Does it look like 126 is still the top for this chop we're seeing? Yeah. I answered that when you asked it before, Petzl. It's not the top, but it's a strong resistance. If we see buy pressure push back into the market on high volume and the shorts remain unwilling to short into active fund pressure, then we can absolutely push up above 126. So is 126 a safe covered call strike? Fuck no. But it is a strong resistance. Thanks, Arnold. BBBY actually has had its second worst month ever, just beaten by the COVID-19 crash. Yeah, it was really fucking bad. But they're still making money. They still have some cash. They still have some money in their revolving credit line. You know, they're not done yet. They still have valuable assets they can sell off. So I don't think they're going out of business right now, regardless of what Chacumba says. I agree that RC may have fucked up in the sense that, you know, maybe he expected better from the board of directors, but, you know, maybe he didn't, right? And if he doubles down now, he doubles down cheap. Is he throwing good money after bad? I don't know. He's more on the inside than we are, right? I want the shares sooner than the expiration. You can't exercise a CSP. Whoever you sold it to would have to exercise it. Thank you, Skono. Sorry if you already answered this, but is our run-up looking like July 18th if there was an opex before the 15th? Wait, what? OPEX is on the 15th. The settlement period, which is the period during which we would run, is from the 18th to the 22nd. Got it, thanks. Okay. If you're out of the money on your CSP that you sold, you can just buy it back and then buy shares or sell a CSP at a higher strike. Okay, yeah, I wasn't sure what he was talking about, but yeah, I think he's got it now. Yeah, no problem, Captain Ventus. Do you know why we ran a day late in March 2021 OPEX? Did they just internalize a day longer? We didn't run a day late. We ran on T+2. This was... right? Or T+3? Wait, where is it? There it is. It's back here. So we had the 18th, which is the expiration date. And then the 21st, we moved up a little bit. And then the 22nd, we ran like fucking crazy, which is T+2. We didn't run a day late. Historically, the only one that has been delayed to T+3 was Feb 24th of last year. It's calendar days, Jimmy John. 14 calendar days, twice. Do you notice SEA rule 15C33M extension does not count holidays as a day? Settlement date for June 17th is June 22nd. And from there, the SEA rule 15C33M extension is July 7th, 15 days. It counts the initial settlement date. So if the settlement date for June 17th did not, the day of the close of the trade is the 17th, right? So it's still the 17th. July 4th may extend it an additional day. March 21, not 22. We didn't have an opex really in March of 21. And I guess we sort of did, but it wasn't very like significant. The monthly opexes back then weren't very strong. Like April was kind of weak, right? It was just like a small move. Obligations were far higher back then, obviously. And FTDs on GME itself were far higher. But I mean, April we moved from 28 to I guess we had a bit of a run there. Or March rather. March opex last year fell on the 19th, with T+2 falling on the 23rd. This is 21, right? 23rd, 24th, 25th. That is interesting. Morning of the 25th. Is there a holiday during this period? No. Yeah, there were a lot of FTDs being blown off through this period. Also, XRT got taken off Reg Show right around here in early March, which caused a crazy run on XRT because they used it to stuff a bunch of obligations from the Jan sneeze. It's an additional settlement day. I wonder. One, two, three. How could they have dodged settlement on the 24th? I don't know. That's a good question. And just one day too, right? T+2+2. I mean, I guess the market maker could have, boofed it a little bit and pushed it out an extra day. Is it odd runs in 2022 have been during months with no holidays? The week of the OPEC settlement week? Or is that seeing a pattern that isn't there and the 28C+2 is the explanation? I mean, it looks like 28C+2 is the explanation. Obviously, if there's a holiday during the settlement week, then that would create a deferral, right? So settlement weeks with no holiday are more likely to create a run. Last year, our runs weren't really falling in weeks that had settlement or had holidays. Exactly what I mean. June 4th extends it one day. July 4th extends it one day. But July 4th didn't, right? July 4th came later. And the May OPEX run was on the April OPEX run was on the 26th, which was exactly on T+2. It's calendar days. It's absolutely calendar days. It's all over their regs. It's very clearly stated. So yeah, July 4th wouldn't extend it one day. Or, here, look, July OPEX. Where the fuck is July OPEX? It's gonna be really shitty and insignificant, but July OPEX is like right here for 2021. That was March that we were looking at. More you. July OPEX was on the 16th, settlement 19th, 20th, 21st. So yeah, 19th, 20th, and then it was done by the 20th. This was small. Like 160 to 190. What's actually fucking crazy is that, we went from a period back here where we were seeing basically nothing for these OPEXs back to a much more like pre-July 2021 pattern that we have now, where our OPEXs are far more significant, even the monthly ones. Even June, right? Like with just the roll forward, like we still saw, a move from 120 up to like 145, almost 150 at the peak, right? We saw 148.50 by the end of this June OPEX. We didn't break Gamma Max, right? But we still saw a move up just on the roll forward of those obligations without the actual settlement of them. Can you show me your long-term entropy? If you show me yours. ACH settlement? What would have delayed it, though? There's no holiday. For last March. Forecasts for upcoming week are now uncertain. I don't know. I think we're going to follow the market, which is obviously very uncertain. Right? I think if the market moves up, so for this coming week, I think if the market moves up, we'll move up, right? We have FTDs, so any pressure applied to those can generate upside volatility, right? So, the FTD is going into like the 5th, 6th, 7th of this coming week are pretty high from the rollover, like the 35-day rolling period. And so if we have market pressure on the CNS clearance on those days, yeah, that can create upside volatility. However, if the market moves down, I think this is going to open up an opportunity for them to short, and we're going to move down hard. And the FTDs will do nothing against a downtrending market besides stabilize us. And this is just, what we've seen over and over and over again with FTD patterns. Do you think it is as likely we could have another fall this OPEX as we did in June? I mean, there's an argument that June OPEX failed, and there's an argument that it didn't. We still went up $30, right? We just didn't go up 60 or 100. So, but this is because this was rolled and deferred, right? versus covered, like March. But Feb was too, right? Feb was rolled and deferred. They're not very different periods of time. The difference being here is that they got us down after Jan 26th, which they failed to do here after May. Like, this is almost identical otherwise. They just had more liquidity back then. So, we ran up on the 7th or the 26th, and then we started running up into Feb, but they kept slamming the price. And a lot of this was downturns in the market, right? But eventually we did move up at the beginning of Feb on the back of that FTD pressure. There was a war, and then there was Feb opex, which is hard to see because most of the obligations, right, were rolled and deferred. But we did go up, like, quite a lot. I mean, we opened at 104 and we closed the day with a high of like almost 126, 124-ish, right? So we moved up like $20 this day. And then 28 days plus 2 later, we went up like a fucking rocket. So yeah, the failure of these cycles is unfortunate, but I still think that if you're timing them with just having exposure and minimizing your risk, even these small opex rollovers that don't turn into a run are very, very profitable. Right? I mean, there was a lot of money to be made here on puts. I know a lot of people did. There was money to be made here on selling covered calls. There was money to be made on the run-up buying calls. For the people that got out Friday in time, they made great profits. Even for the people that got out just a little late, it still wasn't as bad, if it had been carried over a few more days. Going into July OPEX, I'm looking to enter options where I can sell at the end of the week for minimal loss in case we don't run. Yeah, exactly. Which is what I told people going into June. What options would you recommend? I mean, you want farther dated calls, and you want to start buying further out with less delta exposure, and then bringing the position closer to the money directly before the date of exposure. That's why I enter the 950s and stuff like that first, because they don't have a lot of exposure to delta, right? And then in the near term, delta can fluctuate a lot. But IV is probably not going to make any big moves until we run, right? So you build up your volatility exposure, and then you build into your delta exposure as we approach the settlement. Pickle forecast 2 weeks ago was spot on. Thanks for that. Does now going into July resemble Feb or March more? Potential rocket in August? CC's on 10. On plus 10, out of the money GME through next week. Sound okay? August doesn't have a lot of obligations built up yet for XRT. I was looking at that earlier today. And if we look at the chain for or not order sentiment, open interest, there it is. Yeah, if we look at the chain, August very light. July 15th, 90,000 open contracts. August currently only has 1,200 open contracts on XRT. So right now, July looks very spicy. August does not look spicy yet. Not saying we can't run in August also because of the May run. Although I don't think we will. I think it'd be September. If this shit continues into the second half of the year, I think it'd be like September. Like if this exact shit repeats itself, I think it's like September with a big run in November. And then smaller opex opportunities in between, obviously. So like August. How do you establish what percent of XRT contracts or GME exposure? I mean, we just know that they're creation mark longs, right? It would appear that a significant chunk of them are directly correlated to GameStop. You know, things like the shares outstanding, specifically on GameStop runs. To the point where like back in July they almost blew up XRT, the whole fund. And GameStop was the only thing that moved hard, right? The more of them, the better, though, right? Because we don't know what percentage of them are directly GameStop. I do think it's a very high percentage, though. How do you establish what percent? Can you get some of that 900, 950 Jan spread instead of 100 contracts? You could have several thousand. Sure, yeah, you can get a spread there. I still don't really talk to people about multi-leg option strategies. Yes, you can get a shitload of leverage on them. Anything that can prove it's RC buying, there's absolutely not. If he started buying last week, he wouldn't have to file till almost the shareholders meeting. He hasn't filed a Form 3. And so, you know, he has 10 days to report his buy-ins, I think. Yeah, 10 days to report. And then once he files the Form 3 after that, he only has 3 days to report. Nipsey's killer attacked in prison with razor blades. Bullish. Okay. I don't know who that is. Oh, is that the rapper that got killed? Jesus, win level 2 options class. With these fucking people that can't set a stop loss? Are you kidding me? You know what? Double down. Spreads aren't always the best. Sometimes just being long or short is much easier to get out of. As we're trading like one of the most volatile stocks in the market. And you want people to manage multi-leg option strategies on it? It's ridiculous. Even for experts, you know, you can see fucking massive losses trying to exit multiple legs. Stop loss? What's that? Oh, Jesus. Can you do some TA on the VIX? No. Thanks for the holiday stream. Enjoy the day off. Take a breather. Thanks, Stachel. All right. I think I'm going to wrap this up. Pickle's picks will be out tomorrow night. Dillionaires. It's going to be a tough one this week. But I've got a couple in mind. Yeah, more complex option strategies, you know, they're not always great. It's very easy to just stop and take your money off the table. You don't need constant exposure. You know, I see a lot of guys trade like, you know, big complicated multi-leg strategies for minimal fucking profit, but their downside's protected. It's not always that fucking great. I'd rather just have a stop. 99% of the time, I would choose a stop. I mean, I have a lot of capital, that's different, right? So if you have less capital, things like spreads can be beneficial, especially like net credit, because you know you're rolling your margin into larger amounts of exposure. But still, like, just fucking up or down. You don't need that much else. There are advantages to some of them, you know, things like strangles, condors, stuff like that. But those are, you know, kind of more slow burn investments. Those aren't really trading like one volatile event, right? I finally caught up to live. Nice bipolar bear. Foundation, thanks, bud. You got it, man. Thank you. All right, thank you guys so much. Happy 4th of July to everybody. I will see you bright and early Tuesday morning. Have a great night. Bye, guys.